Good morning, Wall Street winners. It is Wednesday, June 5th, and as we head into the open in just a couple of hours, it looks as though, pre some data announcements coming this morning, that all three of our U.S. indices are in the green. We had some positive results last night from a couple of companies. The first, Crowdstrike. So Crowdstrike came out with some very positive earnings, beating expectations, and providing some good forward guidance. And as you can see here, it is up $33 or 10% pre-market. So it's doing very well and seemed to go in the opposite direction of those that announced earlier in the quarter, primarily PanW and Cloudflare. So interesting turn of events there in that sector. We can also see just above that Crude is up, which although I think it's down almost 10%, 8 to 10% in a very short period of time in the last, we'll call it the last 30 days for sure. But it seems to be up and in the positive today, which could provide a bit of a lift for our oil stocks. The other company that had positive earnings and good results yesterday, not the one that we follow, but I'll look it up here, is Hewlett-Packard Enterprises. So known for its desktops and personal computers, but also large servers and computer equipment in general. It is up 14.5% or $2.58 pre-market, as it too provided some good earnings and a good future forecast. So that is an interesting start to the day. We also have some ADP news coming out today. I believe at 8:30, ADP releases its National Employment Report for May. So what we should see there is it's looking for 172,500 increase in private sector employment. And that's a drop from its gain in April of 192,000. So we'll see what comes in there from ADP. We also have the Institute for Supply Management releasing its Services Purchasing Managers Index for May. I believe that comes out at 10 a.m. And they're forecasting that about 1.5 points higher than it was in April. So that's going to provide some data points around inflation and rate cuts for the Fed. We also have earnings on the calendar today. So the big ones, Campbell Soup, Dollar Tree, and Lululemon earnings. So we'll keep an eye out for those. We also hear from the Bank of Canada today. So Bank of Canada, it is anticipated, is going to cut rates today by 1/4 point, most likely. It could be 1/2 point, but we are waiting that announcement later in the day as well. And that is likely to weaken the Canadian dollar, making it more expensive to purchase US dollars. But the Canadian economy has definitely not been as strong and resilient as the US economy has. So they feel that there may be a need to provide a bit of a fuel injection there. And one way to do that is to lower rates. So let's look at the market as we go into today. You can see again, the futures are up. The VIX is still under 13, which is typically a good sign. I have a feeling we may see that start to trend upwards over the course of the next 30 to 60 days. But as we go through the health and retail, Lulu being one of the companies reporting, I think I'm on the fence here, honestly. I think that spending overall in more expensive items, and I think Lulu falls into more expensive, almost call it luxury items, but there's certainly wants and not needs. I think people are starting to cut back on that. I'd imagine that over the last couple of years, you've purchased enough clothing from Lulu when working from home and being in more comfortable athletic wear. I'm seeing that we're probably going to they may hit and exceed expectations. I'm just concerned about future forecasts. So I'm staying away from Lulu at this point, waiting to hear what they come out with. Dollar General had a really bad day yesterday. We'll see if it bounces back with Dollar Tree results today. Walmart still hovering in that same range. Home Depot, similar, same range. Nike is starting to come back into the 95 range. I think we could see that start to climb up towards 100 in the next 60, 30, we'll call it 30 to 90 days in the next quarter. As we go into the next quarter, we have to remember we're also going into back to school. And so there's typically shoe sales and things of that nature going back to school. And that may as well help Dollar Tree, Dollar General, those discount retailers, as well as Walmart, in getting kids ready for school and some purchases and volume there. Healthcare kind of stagnant, but trending upwards overall, small moves on a daily basis. JB Hunt took a hit yesterday. I'm looking at getting into JB Hunt today at the open or within the first 30 minutes of trading if it hovers and stays in that low 158 range. If it drops at all from 158.51 down to the lower 158s, I think that could be an attractive acquisition. Could fall further, so it could definitely get back down to 154, which it touched on last week. So I'll be keeping an eye on that, but I think there's definitely a $2 move in there in the next day or two. If we scroll down through oil, again, I think we're going to see a bit of a rebound today. I was surprised to see Valero up yesterday when almost everything else was down. So it went in kind of the reverse of the rest of the sector. I think it's still a strong purchase at that price range of 155. Crude is well off for the last, if we look at the last month, we can see that it's down 6% in the last month. So it's definitely taken a beating on crude futures. And I have to expect that it can't remain at that level. It's likely going to climb back up. And as crude climbs back up, we should see it pull all of the other oil stocks up with it. The one I'd stay away from, Marathon Oil, with the announcement last week from ConocoPhillips that they're acquiring it. Not sure there's a lot of upside there. So that would be one that I would avoid. Exxon at 112, I think it can get back to 120. I do really like Valero. I think this is a stock that could get up to 185 by the end of the year. And then some of the others that we're having a look at there. So we go down, Crowdstrike. Again, just be careful on this one if you're thinking of trying to get in and ride the wave up. Sometimes it pops at pre-market and then comes back quite a bit and then often recovers. So there is an opportunity there, probably not at market open. Scrolling down further, if you want to maybe a solid long-term acquisition and getting in at a discount, I think Salesforce could be a good bet right now. It took a huge hit after earnings, even though they weren't really that bad. And they've still got a lot of opportunity with announcements around AI to come out of that company. So I'd say that's on sale and at a discount at this point, but it's probably a hold through to the end of the year to make a decent return on that one. Palo Alto in the 290s is attractive as well. It looks like it's going to get a bit of a lift and a bump, I think probably thanks to the Crowdstrike numbers coming out. Net at 68, I think, again, another great discounted stock for a long-term purchase and hold. This is a $90 or $100 stock, I think, by the end of the year. So there's a big swing in potential there for a great percentage gain if you're willing to hold that. Microsoft in the 14s is a pretty attractive buy, knowing that it could get a lot higher and it just has crazy strong fundamentals behind it. If you're into volatility, there's always ARM. So one of the few semi stocks that has had positive uplift with NVIDIA is ARM. I think it's completely overbought at 125, but I said that at 110 and it went to 125. So there's a lot of support behind this and a lot of interest in that. And then as we scroll down, you can see AMD under 160 when it was up to 172 the other day. Again, a lot of volatility here. really got to be betting on desktop, notebook, computer refresh cycle there, which I do think we're going to see, but I'm forecasting that we're going to be seeing that in 2025, 2026 at this point. So you may be a little early to the party on that one. We see Tesla off slightly. Meta taking a bit of a jump pre-market today, up $7. I continue to love Meta as a stock. I think in the 170s, as I've said earlier this week and last, it's a steal. I think this is going to the mid 500s by the end of the year, but it looks like it's going to have a little bit of a pop this morning. Nvidia up again, $17 pre-market this morning, so again on a bit of a tear. And then we've got Google. Google has been one that I have done well with over the last couple of days, just bouncing in and out of this during the day. That is not the 5-day chart. So this is what we're looking at in the morning, and you can see here it's up 0.5%, close to 0.5% pre-market. I'm going to say that is going to come back down and drop just below 175, back into the 174s at some point today. And I would definitely be looking at picking some of that up if it dipped into the 174s again today. An interesting play yesterday, here we go. At the end of the day, I started to buy in at about 20 minutes to 4 yesterday. And what you can see here is in this tail from 3 onwards. So there's 340. From 340 onwards, we could tell it actually started a lot earlier than that. It started down around 313 in the afternoon yesterday. It started to tick upwards, and there was a lot of momentum and volatility behind this. So I got in around 340 and then sold out at 359 as it crossed into the 175s. So just looking for those types of patterns can be a way for you to be in a stock for a very short amount of time, but take out some fantastic profits. Now, one might say, well, Rory, you've missed the upside because it's up 81 cents pre-market. And although that is true, I locked in my profit from yesterday. I have dry capital, dry powder on the sidelines, ready to put into Google or any other stock. And although things can be up pre-market, we still have some earnings and data announcements to come out at 8:30, and these numbers can shift before we open at 9:30. So I'm going to take my profits when I can, focusing on the whole methodology of just trying to make 0.5% to 1% on a trade on a daily basis, and then exiting that position, locking in the profits, because I know I can repeat that multiple times a year, and that's going to ratchet up my return for the year. Finally, we get into financials. These are just kind of quiet. They're doing well. They're moving, in most cases, they're moving upwards. Overall, they do have periods where they come back, obviously. I'm staying away from these today and at the moment, only because they're kind of out of focus and out of the news cycle. I am keeping an eye on them, looking at M&T Bank as an example. It's dropped back down into the mid 140s. I'm still watching for that to fall back into the 130s and pick some of that up. I'm following JP Morgan. It was up in the 200s. I'm waiting for it to come back into the low 190s, or see in general what moves are being made in this market, and look for some value discounted to what the prices are today. So that's where we are on June 5th. I hope your trading is successful. I hope you're liking these videos. If you are, please subscribe to the channel. Tell someone who's interested in learning about investing in the stock market and keeping up on what the narrative is out there. Leave me a like and a comment, and we'll talk to you again soon.